Hi, welcome, and thank you for joining us. This is part of our 52 in 52 initiative to interview 52 Wisconsin professionals in 52 weeks. Today I have with me John Cornell from Euler Hermes. John apparently did not get the memo on Casual Friday, but that's okay. John sells an insurance product that I don't sell, neither does anyone at R&R Insurance, called trade credit insurance. But I'd be remiss if I didn't at least introduce the product to my clients and prospective clients, because I think it's extremely important, especially in the economic times that we're going through today. So with that, John, can you tell us a little about your product in a nutshell?
Absolutely. First of all, with Euler Hermes, and so people are aware, this is not a fly-by-night product. It's been around since 1893, and my company just alone, and there's about 20 companies that do this worldwide, but my company alone represented $2.7 billion, that's billion with a B, in premium last year. So it's not an insignificant insurance player. A lot of companies don't know this product exists. In fact, 2/3 of the companies I meet with aren't aware that it's even out there, but it's trade receivable insurance. Your companies, your clients sell to someone, and if their customer doesn't pay them, we will. That's it in a nutshell.
Okay.
It really covers a couple types of things. There's formal insolvencies, bankruptcy, Chapter 7, 11, receivership, etc. It also covers slow pay. So your client's customer doesn't need to file bankruptcy to have a covered claim.
Okay.
And obviously in a one-on-one meeting I can get much more in depth with that with your clients and help them better understand how that works. And I'm happy to do that.
But all my clients' customers always pay them. There's no ever any concerns there.
Well, actually, in every meeting I go to, typically that's the answer I get is, hey, my clients are all golden. Well, if you remember, let's think of an example. You remember the AFA Foods bankruptcy?
Pink slime?
That was a pink slime. Okay. Yeah, exactly. And everyone heard pink slime in the newspaper.
Right.
Well, that bankruptcy came out from, AFA Foods was a fine company. I mean, they weren't somebody we would say was going to file bankruptcy. But somebody wrote about pink slime in a blog, and the New York Times picked it up. And 3 weeks later, next thing you know, McDonald's and Burger King, two of AFA Foods' largest customers, said, no more, we can't buy any more beef from you because we don't want pink slime in our burgers.
Right.
Well, the Food and Drug Administration has said pink slime's fine. In fact, it's been in our burger for 30 years in this country, and some blogger basically took down AFA Foods with it. That's an unexpected loss. That's what insurance is for. So if your clients always had that crystal ball and they could always see well into the future, sure, they won't need that insurance, and I'd like to buy one of those crystal balls.
Okay. Can you tell me, the audience is primarily Wisconsin employers, CFOs, owners, HR, safety. Tell me some of your recent successes in the state of Wisconsin.
A good example, this week just landed a foods company, a food packaging company, a $750 million company, and they've had some losses over the years, but what they're really using the insurance for is a sales growth tool. They've actually been holding down some credit limits on some customers that they didn't think were as creditworthy as we know they are, because we have the financial statements on those. Also have a plastics manufacturer that they were looking to hire a new credit manager because their credit manager was retiring, and instead of hiring a credit manager, they actually used Euler Hermes to handle the credit function, and they used their controller to just kind of oversee the credit function. And now he's able to kind of do a little bit of both. And in this day and age, when companies are trying to do a little more with a little less, trade credit insurance is a way to do that. Another point, too, is if they hire a credit manager and that credit manager makes a mistake, is that credit manager going to reach into their pocket and write a check out for what's owed? So that's another value thing there.
How much money are we talking about for a policy? I mean, I know my lines of insurance, but I really don't know.
It's going to vary depending on the size of the company. The premium, the rate of premium is going to be less for that $700 million company as it is for a $2 million company. But a good rule of thumb is it's typically always going to be less than 1/4%.
Okay.
So for example, a $100,000 order.
Okay.
If they had insurance on it, it would cost about $200 to insure that.
Okay.
So you have $100,000 of product going out, $200 to insure, the money's coming back.
That's a pretty good investment in my mind.
I would say so.
Okay. If you have any additional questions for John, we're going to keep it short today, but I brought John out to meetings with my clients It's a really interesting presentation to watch, and I recommend you do that at the very least just to get some familiarity with the product. John's information will be below on the YouTube video, email address, phone number. You can always reach me and I can coordinate a meeting as well. I want to thank you for joining us today on the 52 and 52. Stay tuned for more. As I mentioned, they're going to be rolling out for a full year, so stay tuned and we'll talk to you soon. Thanks a lot.
Thanks.